Welcome to the daily brief, where I'll go over the highlights in the market for Thursday, September 22nd, and then see how things look for Friday, September 23rd. And we had another down day. I did, in fact, post a full-length video. So if you want to see a lot of the charts and the explanations, please feel free to check out that video. So let's go back and talk about what happened. Right at the open, we did have a gap lower, and we had prices falling down to S1 at 37.51. As the day went on, we stayed above S1. So that ended up helping things a little bit. Going into the close, we saw some late day buying that took prices almost back to the unchanged level. But then the last 10 minutes, there was a sell program that kicked in and really took a lot of the improvement that we were seeing going into the close. It just wiped a lot of that out. We were down 0.84%. Volume was above average, and the technicals are pretty negative, but we're really starting to look oversold, specifically in the short term and quite a bit now in the intermediate term. But inflation and interest rates continue to be the real focus of the market. Some comments are that higher interest rates are causing some real headwinds for stocks. There are times when stocks and bonds move together, or even interest rates go up and stocks go up. That's when we have a growing economy. Well, that's not what's happening right now. So as interest rates are going up, that is putting a lot of pressure on stocks. A number of the different other central banks in the world ended up raising interest rates. The Bank of England raised it 0.5% to 2.25. Norges, I think I'm saying that right, in Norway, they raised it 0.5% to 2.25. Bank of Indonesia was up 50 basis points to 4.25. Hong Kong up 75 basis points to 3.5. And this is interesting. The Swiss National Bank, they raised it 75 basis points. And for the first time since 2015, they're actually positive. They had been having negative interest rates this whole time up until they made this decision. The Bank of Japan, which is in a different situation, they kept their rates unchanged, and they're still negative. They're really trying to stimulate economic growth there. Their rate is currently at minus 0.1%, and they don't see them raising it anytime in the future. The transports hit another 52-week low. Stocks are short and intermediate term oversold. We still have a lot of the yield curves that are inverted, suggesting that a recession is coming if it's not already here. Sentiment is starting to drift a little bit more towards the fear side, but it's not extreme. We had jobless claims coming in less than expected, and that's what a lot of people are focusing on, that the employment is still looking good. Right here, you can see 7,000 less people filed for first-time jobless benefits than what they expected. And we've been seeing that week after week after week now. The second quarter account deficit, it actually improved, if you can call $251.5 billion an improvement. But hey, it sure beats 260 billion, doesn't it? And the leading economic index decreased 0.3% on a month-over-month basis. So that's projecting out into the future that we will see continued economic weakness. Our trend is negative and still slightly above 20. With the down day, our bias is negative, and the last number of days have been negative, so our momentum continues to be negative. So our outlook, the technicals are negative and oversold. Now, it doesn't mean we're going to stop here. It just means that we're starting to get extreme negative with a lot of our readings. We have the preliminary September IHS market manufacturing, that's one report, and then the services report, that's the second one, coming out. Those are PMI readings, Purchasing Managers Index. And then we have the whole list of geopolitical concerns, but still the main thing for the markets are the interest rates and inflation. So our scenarios, we could go with this scenario, but we're becoming oversold. So if we see some kind of a bounce or slowdown in this, if you go short in the market, you kind of have to really be careful of that right now. We can't go with the up scenario necessarily because everything is so negative for the time being. And we can't really go sideways because the ADX is slightly above 20 and it's negative. But be watching because everything is pointing down, but we are getting oversold. But I don't know if I would jump into a bunch of long positions just because of that reason. I would want to see more confirmation on the charts, but that's where I come out. So our conclusion, not hard to make here. Negative, negative oversold, and just flat out negative. So thank you. Have a wonderful weekend. I will be preparing another full-length video and daily brief over the weekend, as well as the weekly video and the intermarket analysis video.